Are you a Canadian landlord? Have you noticed the rental market is changing fast? Rents are dropping, vacancies are rising, and new regulations coming day by day. If you are feeling the pressure, you are not alone. In this video, I am breaking down what is happening in Canadian rental market right now and what does it mean for you. From falling profits to skyrocketing expenses, I will show you the real challenge landlords are facing right now. But here are the good news. I will also share you some actionable tips so that you can survive this phase. So if you are ready to stay ahead of the game, let's dive in. Hello everyone, welcome back to the channel. My name is Parth Soni. I'm a realtor based in Ontario. I help families and investors like you to navigate the real estate markets. If you need any help in terms of real estate, you can book a one-on-one call with me. First link in the description. Today we are exploring all the challenges that landlords are facing right now. So let's break down this issue one by one. So the very first we have is the decline in rental rates. Now, recent data indicates a slowdown in rental growth across Canada. According to TD Economics, rents growth is forecasted to ease at 3.3% in 2025, down from 6.7% in 2024 to 8.2% in 2023. Again, if you don't know anything about this, I will explain you in detail in just a minute. So majority we have seen rent decrease in Ontario and British Columbia, and some parts of Alberta we are seeing rent going up. Last year, we have also seen increase in vacancy rates as well. And again, this is the report from the rental.ca, one of my favorite reports for all the landlords out there and for my clients. So if you're someone who don't know about it, check out rentals.ca. They do excellent reports out there. So this is the overall rent, what is happening in Canada. And if you're someone who's specific looking for a city, you can definitely check out. So over here, you can see like the Vancouver at number one bedroom, roughly about $2,500. And they will also tell you what is the month-on-month rate that is happening and year-on-year as well. So this is for one bedroom and two bedroom both. So if you see month-on-month, it's negative 0.9% and year-over-year, it's negative 7%. And same for Burberry, Toronto, Mississauga. So depending on which area you are from, you can definitely check out all the details over here. So let's go down to Waterloo Region. So Waterloo Region right now for one bedroom, it's $2,000 and it's a negative of 1.7% month on month. Now Waterloo is specific like student area. So month over month, you will see that kind of negative. But overall, if you see, it's 5.3% increase in one bedroom and negative 1.4% for two bedrooms. Again, depending on the city, you can go over here and check it out. So all the greens over here, they might have some positives and some negatives and some neutral as well. And this is a national overview for a rent for, so it says 0B means studio, then one bedroom, two bedroom, and three bedroom. That's a total apartment, condo, and townhouse. I don't find this thing very useful as most of the time rent is very specific. What is happening in Toronto might not be the case. What's happening in Windsor. So just check out your local market report. Now, this is something asking rents in Canada declined 3% in 2024. If you see over here from December of 2019 to December of 2024, we have started roughly about $1,800 and right now it's $2,100. We have seen in last couple of years, in last I would say 2 to 3 years, we have seen a good jump. So if you see from 2021, mid of 2021 to mid of 2023, there is a good jump in the rent. And right now, for the past 1 year, you are seeing a steady line. And for past couple of months, it's also coming down because we have already seen a huge increase in the rent before. This is what it says, like annual change in average asking rent. So from 2019 to 2020 to all over 2024. So that's the big jump happened, which I mentioned from 2021 to 2023. And right now we are seeing a decrease of negative 3.2%. The other thing which I found very informative over here is like if you go down province wise, so you can get a quickly gauge the idea that what is happening province wise. And if you're someone who's go down a little bit more detail, this is a really good report over here. Again, from the municipality point of view, so what's happening in Vancouver, Toronto for a studio, one bedroom and two bedroom and three bedroom, it also changed year over year. So you get an idea. If you're someone who's looking for an investment property, you can gauge from this one what's happening in that particular city. And also if you're renting right now, you can expect what kind of rent you can expect in coming future. Now, this is what I want to focus a little bit over here. Rents fell more than 7% in Toronto and Calgary as well. So if you see, the Calgary also saw a decline in the rental yield. So basically in Calgary, we are seeing 7.2% drop to an average of $1,921. So all the investors out there who are investing in Calgary, make sure you know about this number. Don't just go whatever the realtor is saying. See what is happening behind the numbers and educate yourself about it. And again, this is another report from TD Economics. Again, a really nice report if you want to check that out. So basically, what it's saying, let me summarize this. This declaration suggests that the landlord may face reduced rental in the coming years or coming months, basically. So don't expect what you are getting in 2021. You will get the same amount of rent or same kind of rent moving forward, or the kind of appreciation you are getting in the rent. Now, Canadian housing market has seen a significant increase in the new units. In the first half of 2024, combined, the home starts in Canada's sixth largest CMS reached 68,639 units, and that's a 4% increase from the same period of 2023. And when you see headlines like this, like Toronto real estate developers have never had more unsold condos. So what it means, like roughly about all the condos that are not selling, now developers might get pushed down to convert them into purpose-built rental rather than someone who just purchased the unit and rent it out to someone else. So this is something again another competition for landlords out there. And as we are talking about purpose-built rentals, here's another announcement from CMHC, that is the Canadian Mortgage and Housing Corporation. They are committed to providing $20 billion in loans to support the creation of more than 53,000 purpose-built rentals. So again, this will lead to more options for tenants out there, means higher vacancy and more competition among the landlords. Now, traditionally, immigration does support a huge amount of Canadian landlords. However, recent projection shows a decline in the immigration numbers. So the Canadian population right now is estimated at 40.3 million people in 2024 and expected to continue to grow, but the pace may vary because based on the recent news from the immigration department, the amount of people they are planning to immigrate will definitely reduce. And a decrease in new immigrants will definitely affect the rental market out there, meaning the demand for the rental property will decrease, and this will affect the landlord ability to secure a tenant. And also, many immigrants are thinking to go back to their home country. I'm an immigrant myself, and I see so many people from my community going back to the home country because the cost of living is very high or the job market is not stable. So, there are so many reasons people choose to move back to their home country. And again, this will definitely affect the landlord's ability to secure a good amount of tenants out there. And once people started going back to their country, this will put a negative pressure on landlord because the already acquired or the occupied unit will come on vacancy one more time. And again, as we have discussed, more competition will be there. Now, the fourth factor in this one is the fluctuation in the interest rate. Now, many landlords purchased their property 4 or 5 years back, estimating that the interest rate will be stable. And we all know what happened in last 2 to 3 years, how interest rate went through the roof. However, the Bank of Canada started a monetary easing cycle in June of 2024 after it hit the rate of 5%. And since then, the interest rate have reduced by 1.75%. And we are seeing also prediction that the further rates reduction will come in 2025. And this fluctuation can affect the mortgage payment and overall profitability for landlords. But even though we are seeing a decrease in the mortgage rates, it will no longer like what someone has expected back in 2020 when they have purchased their condo, and right now the closing has come up for them or might be in the next year. So the interest rate gap is still there. So the kind of cash flow they were expecting back in 2020 or 2021, that will not be in the accurate in the today's market. With the recent changes like Ontario Bill 97 have introduced stricter rules for landlords. This include new air conditioning right for tenants, stricter eviction procedures, and a higher fine for non-compliances. While all of this are aimed to protect the tenants, but this regulation add a more complexity and potential cost for landlords out there. And by no means I'm suggesting like we should not have laws or we should not protect the tenants out there, but the amount of load LTV have right now. So if you're someone who's in Ontario right now, you might have noticed that the time period, if someone if you have a case in LTV board, the tribunal board, the time period is roughly about 8 to 9 months for hearing, right? And I advise all of my landlord clients to go and check out on a Facebook group for a landlord community of that particular city that you are planning to invest in, so that you can go on a ground reality what is happening among the landlord community in that particular area or city. The sixth one we have is a rising unemployment rate. In 2023, we have unemployment rate of 5% and that rose to 6.5% in September of 2024. That's an increase of 1.5%. Higher unemployment rate can lead to increased rental payment delinquency and a larger pool of tenants with unstable income. This is a major threat for landlords. Now, again, I don't have a data like the number of increase in unemployment is only tenant side or the owner side. Of course, not all the people out there in unemployment category will be tenant. There will be few owners and tenants and more the people as well. But just to put you out there, like if the unemployment goes higher, if the number increases, this put a negative pressure on landlord. So, in summary, Canadian landlords are navigating a challenging landscape. And all of this is shaped by declining rent growth, shifting immigration pattern, and oversupply of housing and fluctuating interest rates. Staying informed and adaptable is crucial for landlords to mitigate risk. Thank you for watching. If you find this analysis helpful, please do subscribe to my channel and like it. I will see you in the next video.